This is the Investor Mindset Podcast. What have you found, Tim, that holds most passive investors back from getting started, making these kind of passive investments? Because the upside's so great, but yet so few people are actually investing in real estate in this way.
Yeah, man, I think that's a great question. I think probably it's education, right? Like everybody feels familiar with the stock market. They hear about it. They see it on the news every single day. They're not talking about syndications on the news. And I think it's just, it's an education piece. And it's, the more you educate people, and that's why you're doing a phenomenal job with this podcast, right? That's why I've been able to grow, because I'm always educating people on social media about what we do and how we do it and why it makes sense and why we can pay these kinds of returns and all this other stuff. And it's an education piece. So it's not a sales process. You don't have to go and pitch somebody on investing with you. You have to educate them on why it's better than their other options that they're looking at.
Yeah, I think that's so smart. It's such a good way you put that, because at the end of the day, sometimes people will feel like, oh, they're being sold an investment, but quite the opposite. They're being educated in what that opportunity is. Most people really, when you're making this kind of a big of investment, for some people, 50,000 is a big investment. For other people, 500,000 is a big investment. Regardless of what camp you're in, you need to understand the opportunity. You need to understand what the operator's background, track record, and experience is. You need to feel comfortable making that decision to invest your money. And so spend that time getting clear upfront before you then go forward and make an investment. So when it comes down to getting clear on what some of those pieces are, understanding who the operator is, the deal is, the market, those kind of pieces, what do investors need to look for when they're going through that process of getting comfortable and then making that decision?
Yeah, I think whenever I'm investing in a project or thinking about bringing capital or sponsoring a loan for somebody, I'm looking at essentially three things. One, what is the asset, right? Is it something that, and real estate's not a hard sell, right? Real estate, everybody knows real estate. They live in real estate. They drive by it every single day. They're familiar with HGTV. So it's not a hard sell to talk to somebody about investing in real estate. They just don't know how to. So going through the process of educating them, right, on investing in real estate is one thing. But, then I dive into like the asset class. I like apartments. I know that, if shit hits the fan kind of a thing, my team can step in and operate it if we had to. I think, units, you can fill up and rent apartments a lot faster than some of the other asset classes. I like apartments. So I prefer that. I like B-class apartments. I don't get into luxury. I don't get into the rougher parts that are more management intensive. So that's one of the things that I look for necessarily. And I think a lot of other investors look at what is the asset. I think the second thing that investors look at is the return on investment. And twofold on that. One is the reward worth the risk, right? Is me putting my money out there and the return I'm going to get worth the risk of me putting my money out there? So that's the first thing that you got to weigh out. And then the second thing to weigh out, or that I look at, is opportunity cost, right? Like, where else could I put my money to earn a better return or have greater upside in a project? And so, you could have some investors that are hard money lenders and they want a 24% return. You have other people who want, a 2 or 3% return, right? Just kind of depends on who you're talking to. And then I think the most important thing is the third, which is the borrower, and conveying that you have the conviction to get it done, right? I know somebody who one of my business partners was banked by the same guy who used to bank Trump back in the day or something. And Trump was worth $10 billion or something. And I remember him telling a story of like, hey, he really couldn't write a check for $100 million. And to be worth 10 billion and not be able to write a check for 100 million, that's like being worth $1 million, not being able to write a check for 10,000, right? And so you're like, why do you keep on banking him if he has zero liquidity at the time? And I don't know what his financials look like now, but the banker goes, because he gets things done. We know he's going to get the job done. We know that he can refinance, he can raise more capital. Like, we know he just gets things done. And one of the things that I've conveyed to my investors is like, I will work third shift at Taco Bell if I have to get you your money back, right? I've lost money on deals, but my investors never have lost money on deals, right? I'll give them equity in a new deal just to recompensate them on a deal that didn't pay them out what we hoped to pay them out on the past one. So I've done plenty of those things, and it plants seeds. And and it builds your character, right? It allows them to see you as somebody who is going to do the right thing and is going to show up and is going to get the job done. And so that's what I'm looking for. I'm looking more for the borrower, more for the character of the borrower than anything else. And then I look at the returns, and then I look at the asset kind of thing. So, if it's somebody that I know can get some things done, like, I think that's super, super important to convey to your investors.
The smartest investors, they start with the operator first, the borrower, as you're saying. And the reason is because, just like you outlined, you've lost money on deals. I've lost money on deals, and I've done exactly the same thing. I've stroked checks, 2-figure, 3-figure checks. Investors got paid what they were expecting to get, and I lost money on the deal. But the great thing about that was, one, I learned a lot about what not to do. And two, those investors are with me forever. And when people start seeing that level of character the same way you end up really being able to build a track record in the market that is really strong. And so I think it's important to remind the investors out there that when you're having these due diligence conversations, you're asking questions like, tell me about a time you've lost money on a deal, or tell me how you'd handle that. When people say, well, I've never lost money and I don't ever plan to, and it's never going to happen. Let's be realistic. Even if you don't lose money on the entire deal, there's things that are going to happen in an investment that are not going to go right.
It's real estate, right? I mean, who could have predicted COVID, right? Who could have predicted banks tightening up? I mean, there's so many different variables. I think a great question is, how are you controlling the variables that you can control, right? Like tell me how you're mitigating risk in your different investments. Tell me about your worst deal you've ever done. Tell me about the best deal you've ever done. Tell me about the time you lost money on a deal. I think those are all great questions to ask the operator. And how do I get screwed on this? Right? How do I lose my money on this deal? How do I think those are all great questions, and they're asking those questions in their heads anyway. So I try to just punch them in the face and answer them before they even ask those questions, right? And hit on it before, because then I look like a mind reader, and they know that it's something I've spent time, which I have, right? I've spent a lot of time formulating my business model in a way that mitigates risk, because I lived through the last 2008 crash, and saw a lot of people worth a lot of money who were worth not a lot of money. There were people worth tens of millions of dollars that went bankrupt, and people worth tens of millions of dollars that are now worth hundreds, if not billions of dollars. And you're like, how does the same market affect everybody, right? I don't understand how that happens. And people move in different directions based on the same market happening. Like, how is that possible? Well, they have different business models. They have different strategies. They have different ways of mitigating risk and different types of assets that they invested in, and a lot of different moving parts. So I think asking those questions, you got to do your due diligence on, especially the operator.
It's really smart advice here. And the truth is, a lot of people went through a lot of pain in 2008, and it can be really powerful for you young active operators, or for you passive investors out there, to ask some questions, not from a place of fear, but from a place of feeling what that felt like to have major loss, or the fear that goes along with it. Not to go and live in the fear, but to experience what that emotion is, so you can use that in a powerful way to be conservative, to be able to preserve capital and do things that are really smart. So if you're ready to start leveraging the power of partnership in your portfolio, then I invite you to invest directly alongside us in the same type of institutional investments that I personally invest in. These are located in some of the strongest markets across the country, operated by managers with decades of experience, and we come together to leverage the power of partnership to be able to deliver phenomenal returns. You can learn more and apply to work directly with us at vonfinch.com/invest. Be able to schedule a time directly with a member of our team and see if this is the right fit for you and your portfolio. That's vonfinch.com/invest. I look forward to speaking with you soon.
Thank you for listening to the Investor Mindset Podcast. If you like what you heard, make sure to rate, review, subscribe, and share with a friend. Head over to theinvestormindset.com to join the Insider Club, where we share tools and strategies from the top investors and entrepreneurs on how to take it to the next level.